Good morning from London. I'm Guy Johnson alongside Kriti Gupta. We're an hour away from the opening trade, so what do you need to know this Monday morning? It is a backloaded big week. Fed Chair Jay Powell's Jackson Hole speech Friday takes centre stage. He's expected to confirm the cuts are coming, but how big they will be is the key question. Powell, though, will be competing for the limelight Friday with the BoJ's Governor Ueda, who will be testifying before Parliament. The yen is already up more than 1% against the dollar this morning. Huge move. Traders positioning maybe for a hawkish tone there. And US politics will be in the mix as well. Vice President Harris will officially accept the party's nomination in Chicago as her price-setting economic agenda struggles to gain traction, Kriti.
In the meantime, a quick check on these markets. You're not seeing that much action when you look at futures trading. Instead, barely in the green when you look at Eurostoxx 50 futures higher by 0.1%, but notable underperformance right here in the UK. The FTSE 100 down about 0.2%. To me, it's the currency story that matters. Euro dollar at a 110 handle, cable hovering at 129. The countdown to the opening trade starts right now.
Monday the 19th, a slow start to a big week. Actually, maybe not that slow a start. Certainly if you're the yen, dollar yen on the move aggressively this morning. Kind of, I think, setting out the tone really nicely for a week that I think is going to be fascinating as we work our way towards Friday. It is Ueda versus Powell. Who is going to have the bigger market impact? We're going to have to wait and see. Powell's certainly on the docket at Jackson Hole. We've got this testimony coming up from the BoJ governor. And given what we've just seen in the markets, the turbulence that's been caused by the BoJ, you want to be paying attention to both of these two events, Kriti. What do you think? Which one moves the market more?
You know, I would say about 2 hours ago, I wasn't convinced it was going to be Ueda. And then I saw this great chart that talked about the fact that hedge funds are bullish on the yen for the first time in a very, very long time. They're long, which never happens. It's just kind of this clearing, this unwind of a hedge that's been in the works, I want to say, for a couple of years now. I think I'm on your boat here. I think it's Governor Ueda that's going to be the game changer this week.
I'm not sure which one it's going to be. Certainly, we've seen in the past Powell moving the market significantly at Jackson Hole. This time around, I don't know. The market's expecting a lot out of him. Certainly, there is this signal that we are all anticipating that he's going to be delivering on cuts. Do we get that? Probably. The question is kind of size and scope, and kind of what is going to move him, maybe, and the committee to deliver a 50 basis point cut. I think you've really got to wait for the payroll number before we get that.
Yeah, you definitely do. We've got plenty of economic data this week as well. We'll get to that in a moment. But I think it's also crucial that so many central banks around the world are kind of front-running the Federal Reserve here. And I think that's significant when we're talking about this question of credibility. We have the Riksbank, for example, tomorrow. They're expected to do a quarter rate cut, which I know isn't one that we traditionally compare to the Fed. But I think it's important that you're starting to see the rest of the world make moves faster than the Federal Reserve in the opposite direction. I'm having deja vu to the hiking story that we had a couple years ago.
So Friday morning, we're going to be coming in. We're going to be watching this testimony. We're going to be figuring out exactly what Ueda is saying. This testimony is basically, this appearance is basically there because Japanese parliamentarians want to know why the BoJ caused so much turbulence in global markets. That's why he's on deck. But we've got some great coverage lined up of Jackson Hole as well. That's going to be fascinating to watch what we're going to be seeing there. The PMI data, you reference it. The expectation is the comp numbers coming out of Europe this week, the Eurozone, will still be above 50, but it's a really tough call.
It's a really tough call. We're going to continue to see if there is that kind of difference in those stories between the periphery outperforming, so much of that due to fiscal spend, versus that continuous story of weakness in France and Germany. And it's not just European PMIs. We get U.S. PMIs as well. So
we care about U.S. PMIs?
I think we do.
ISMs, yes, maybe.
I think we care about them in that if they tell a different story than what we're already seeing, the slowdown, and then you see that kind of almost contradicted potentially with the comments coming out of Jackson Hole. I think you want it all to be in the same narrative. When you start to see ambiguity between the data and what you're actually hearing from the Fed speakers themselves, I think that's where you run into trouble.
I think we've also got quite a continuing read on the consumer in the States as well. What was Walmart was last week, but we get Lowe's this week.
You love the Walmart story.
I do love the Walmart story. I think Walmart should be in the economic agenda that we get every week looking ahead. But this week it's Lowe's. It's Target. There's some big names still reporting on the consumer this week. Yeah,
we saw that Home Depot as well didn't come out with the best numbers either, and a lot of that had to do with comp sales as well, and the disposable income story. And I think that's significant. Again, not obviously top of the corporate earnings, but are people kind of trading down? And that's just one topic that's come up in U.S. politics, certainly when it comes to the economic aging, which we're going to talk about that a little bit later in terms of Kamala Harris, what we learned from her and the policy agenda over the weekend. But also when it comes to things like foreign policy, I think is also one that comes up in the political circle. Ukraine funding right now seems to be top of the docket on both sides of the Atlantic.
Ukraine is fascinating in as much as, A, we've got a story on the ground that is developing and is quite hard to call as to the impact that the Ukrainian incursion into Russian territory, which we haven't seen, obviously, since the Second World War, is going to have. But also the funding story in Europe. You've been focusing on Germany.
I think it's a really fascinating one. We know these kind of debt discussions, or these budget discussions, I should say, out of Germany are crucial. But the fact that they're actually pulling back on Ukrainian aid, I think it's going to be something like 6% of what it was previously, is massive, because it's already being used as rhetoric going back to the States from the Trump campaign saying, well, look, if Europe's largest economy isn't helping kind of fund the aid towards Ukraine, why should the United States? That's one argument that's showing up in the U.S. political sphere, not to mention what kind of precedent does it set for other countries within Europe as well.
We're going to be talking about this a lot throughout the morning. I think it's going to be really interesting to see how the Harris camp will manage this story, and also who are the key personnel that are going to be managing this story for the United States were that camp to win.
Yeah.
Does the Secretary of State keep the job? Is there policy continuity here around what happens in Ukraine? I think that's all going to be fascinating. The Europeans are really paying attention to that this week.
They really are, at a time when Kamala Harris is largely seen as almost invisible for a while, suddenly really hitting the global stage in kind of a mixed fashion. And that's going to be something we're going to try to get clues of from the Democratic National Convention. Of course, that kicking off today. It's just one of the major events that are happening this week. We already talked about Jackson Hole. That is kicking off again today. A lot of the highlights coming out throughout the week. The big one coming from Chair Powell's comments on Friday as well. But before we get there, we got plenty of economic data. I mentioned the Riksbank as well tomorrow. We also have the Turkish rate decision. So there's a lot going on there as well. Plus, of course, Guy already talked about those retail earnings, Target, Macy's, TJ Maxx, or at least the parent company of it as well. But then we get the ECB's Panetta speaking as well on event on Friday, alongside some of the economic data we're getting throughout the week. It's actually a fairly busy week. And I think when you see a busy week like that, I'm curious if the markets kind of shrug their shoulders. As you end the week where you started the week, which is we don't really have clarity on what's going on. I think the one place where we might get it is on the U.S. political sphere, and I think that's why the DNC is so important.
I think the DNC is going to be important. If you're a European, though, what you're watching for here is, A, what Harris has to say, what we're going to hear from Biden. I think Michelle Obama is going to be speaking as well. It's going to be interesting to get her take. But I think the kind of behind-the-scenes story is going to be fascinating. I would imagine there's a lot of diplomats there this week. Europeans trying to figure out who are the key people they need to be talking to. If there was to be a Harris administration, who are going to be the key people pulling the strings within that administration? I think there's a lot going on. This is actually a really important meeting, not just kind of for the headline acts that we're going to hear, but from what goes on behind the scenes, sort of setting out the stall, because it's so new. There's been no lead time in understanding what this Harris administration could look like.
And how similar it looks like to President Biden. When you look at some of the kind of reports of who the inner circle might actually look like, some of them are some that have been close advisors to President Biden, especially on the foreign policy front. But then I think it's important to highlight what we learned over the weekend, which is a lot of that economic pricing, or price gouging, I should say, the elements in the medical sphere, but now in terms of things like grocery prices as well, that President Biden had as a key part of his economic agenda, seem to be carrying over to mixed results. I think Jason Furman, who was the former... Not a fan. And he's someone who's worked within the Democratic administrations before, and he's even saying this is a policy that doesn't work and historically hasn't worked because it could ultimately hit supply. In what world did we think that protecting against price gouging could end up actually being inflationary and have the opposite effect? Is that something that markets have to pay attention to?
It's the supply side story that I think is so fascinating here, and how critical that's going to be in all of this. And Biden has, in some way, sort of changed the narrative around the supply side, really pushed the supply side in a way that we haven't seen for generations in the United States. This kind of leans slightly against that. The inflation is obviously an imbalance. And if you can fix that one way or the other, you're going a long way. But she seems to be trying, that kind of policy seems to be trying to sort of contain one side while still managing to try and push I don't know, it's really difficult to judge what effect it's going to have.
But this is where that conversation is. Does the fiscal matter more, or does the monetary matter more? And I think in Europe, we've kind of made the argument that fiscal might actually be the driver of the outperformance, and things like Italy and Spain, et cetera, arguably Greece as well, throw in there. I'm going to make the argument that maybe the fiscal matters more in the next 6 months than the monetary does.
Don't tell the financial markets. They won't believe you, because we're going to be focusing so much this week on the monetary. We've got some big events coming up, and we're going to be discussing that with our guests. We're going to be across the globe global currency and bond situation, Allspring's Lauren Van Biljon is going to be joining us. BlackRock's Karim Chedid is going to be talking us through the markets at the open, and ahead of the DNC, former Obama official and president of the Global Situation Room, Brett Bruen, is going to be joining us as well to give us a take on who we should be listening to at this DNC event, and who are going to be the key people that we should watch out for were we to see a Harris administration. What else do you need to know this morning? Let me walk you through some of the other events that we're going to be thinking about and news flow that we're going to be watching. After weeks of contentious negotiations, Germany's ruling coalition has apparently now sealed a final agreement on next year's draft budget. Loans to state rail and highway operators were included, as well as a redirection of funds previously allocated to curb energy costs. The agreement now goes to Parliament for scrutiny by lawmakers. It's not quite a done deal just yet. Porsche has agreed to become a shareholder in Varta, providing fresh cash to the embattled German battery maker as part of a debt restructuring deal with lenders. Under the plan, Porsche and its majority owner are set to each hold around 32% of Varta after participating in a 60 million euro, I think that should probably say, capital increase. And Britain's prospective home buyers apparently stepping up their search for properties after the Bank of England's first reduction in interest rates since the start of the pandemic. According to the property website Rightmove, estate agents have seen a, quote, 19% jump in people contacting them about homes for sale so far this month compared to a year ago. I think this is. We're going to hear from Andrew Bailey Friday. So he's going to be speaking at Jackson Hole. He's going to be giving us some clues as to where we think interest rates are going to be going here in the UK. There does seem to be, this is just anecdotal talking to people, this expectation now that interest rates are going to fall relatively quickly here in the UK. I don't know. You speak to the economics team here, they have some big questions as to whether or not actually interest rates are going to come down much further from here. And you do wonder, therefore, what impact that's going to have on property sentiment.
I'm curious about what the reaction function of that looks like, because if you do see those interest rates come down as well, does that 19% move higher that you're seeing in those rental price, or excuse me, buying prices actually sustain? Is that the run rate that we go at? That suddenly this is a big revamp in the housing market, or just kind of a one-time thing?
I think that feels like a one-time hit, and it's off a very low base as well. So you have to appreciate that. So obviously percentage increases off a low base look much bigger. So I think we're probably maybe normalising a little bit, but it's going to be a hard road back to normalisation. There's still an awful lot of people that are rolling off 3-year, 4-year, 5-year mortgages that are having that step up in terms of their numbers. So the hit in terms of the interest rates are still coming through, and rates in the UK are still restrictive. So it's still having an impact. But it's just, I think there's a sentiment now, there is a sentiment shift that actually we are going to be seeing maybe rates coming lower. But the question, and it's a bit like the US, we just don't know by how much. Yeah, and I'm curious to see how that shows up. Given that data, we see how that shows up in this morning's trade. It's going to be a quiet session, likely waiting for a lot of the macro story later this week. But I imagine we're going to see some of the home builders potentially move on something like this. So that's going to be some of the stocks that we watch. And speaking of, we should mention really quickly, we are getting some TradeGate pricing for Rheinmetall, of course, the major defense company. It looks like it is expected to fall 6.8% on TradeGate. This is versus the close on Friday. Of course, we're going to keep our eye on this at the open. A lot of this hooked to the idea that funding for Ukraine coming out of Germany really taking a backseat, now expected to be about 6% of it was formerly. Guy. Yeah, these companies have been big beneficiaries, obviously, of the rearmament program. Yeah. Germany's always been really hard to call. The budget obviously thrown out by the Constitutional Court. We had problems around the debt brake. Obviously, Lindner has been pushing that very hard. And maybe Rheinmetall doesn't see some of these big orders coming through, but elsewhere there are huge opportunities, I would argue. This company is... The rearmament story is not just a Germany story in Europe. It's a across Europe story. So we'll see what effect that has. Coming up, Germany will reportedly block new aid requests to Ukraine, as Kriti's been saying, despite developments on the ground. We'll dig into the politics around that. We'll get you an update. We're linking it to Rheinmetall this morning. That story, a clear line. Traders eyeing appearances from Powell and Ueda this week. We'll get back to the markets. We'll talk about that. Look, you got any questions? Who do you think is going to move the markets? That man or that man? We'll decide when we come back, or we'll give you an idea when we come back. That's all coming up next. This is Bloomberg.
If you turn the shower dial and it just takes 30 seconds before you feel it, you know, we've been turning it. Is this just the beginning of what's coming down the pipe? So there's actually a bunch more impact of the tightening that we're still going to feel?
I think we've all had that experience, haven't you? Just over-tightening the tower a little bit, the shower a little bit too much, maybe a little too hot. Austin Goolsbee, the president of the Federal Reserve Bank of Chicago, speaking about the repercussions of rate hikes and the lag effect that we have seen coming through. Lauren Van Bion, portfolio manager and head of rates and FX for the global fixed income team at Allspring Global Investments, joining us now. I think I probably just mispronounced your name to start with, so let's just kind of kick it off on the right.
Strong start.
It's an easy one to get wrong.
We'll just park that for the time being. Look, this week we got a really interesting kind of end to the week. You got Powell speaking Friday, but you've also got Ueda speaking Friday. And I'm kind of wondering which one of those two things you think is going to have the bigger effect. I'm looking this morning at a yen move that is really quite significant. The yen's up by 1.4%, 1.3% already this morning. Is the market already telling me that I want to watch Ueda?
I mean, we know the yen's been materially undervalued for a long period of time. You know, that move in late July, early August got us probably, half of the way back to neutral. Powell's still going to dominate, let's be frank.
Okay.
It's all going to be about that pace. You know, we want to see...
So what's he going to tell me about the pace? Because he's going to tell me that rate cuts are coming, right?
He's going to tell you rate cuts are coming. That's a given.
Yeah.
Key is going to be that pace. And I think he's going to push back on the idea of anything more than 25 and anything more than slow and careful into year end.
But is he going to push back on other metrics, for example, pulling back on QT or any of the other kind of repo functions, repo operations? I'm talking about just outside of interest rate cuts. What other tools could he talk about?
I mean, the time does seem right to talk about redoing the pace of QT or something like that. But he might be a little bit concerned, given the size of the market moves we've had the last couple of weeks. So maybe it's far more about rate cuts are coming, but don't panic, we're in control, no need to get too excited.
Does that matter? Does it matter what the stock market does? And of course, we as market watchers
can't believe you just said that.
I know. but he doesn't like to admit that. He doesn't like to admit that what the stock market does impacts financial conditions and impacts their thinking. He says they're focused on the economy. That's been the rhetoric that we've heard. Could we see him actively talk about market panic?
Market payments? Well, I mean, obviously I'm in fixed income, so no, equity markets don't matter.
But even in the fixed income market, okay, fair enough. But even in the fixed income market, we've seen a pretty sizable move. Would that create panic as well for him?
I don't know about panic, but I think it's certainly a sign that markets are not in equilibrium, are not at neutral, and are really struggling to time the rate cycle to come, both in the US and further afield. So that will be making central bankers nervous, absolutely. But I think the path is still clear to rate cuts. And maybe it's not too accommodative, but to neutral, absolutely, it's time.
So how quickly, can I take... The data got bad. We got the payroll number. That freaks everybody out.
Well, you say bad. It was still well above 100,000.
OK, it's OK. Relative to expectations, it was bad. Okay? Then we've had some better data, so we're kind of back. We're OK again. We're comfortable. We're all happy with what's happening in the economy. The soft landing feels like it's still back on again. Is 25 bips consistent with the soft landing, and is 50 consistent with the hard landing? Is that the way I should think about it? If he signals we're going to 50, then all bets are off. Yeah.
Yes, that does feel appropriate. 50 to me says there's something they're seeing in the data that they're really quite worried about and perhaps quite scared about. 25 says things are softening, but we think the pace is manageable. You know, we can control this. I mean, to me, really key going forward, obviously labour market is always key, but it's going to be what do we see that labour hoarding disappearing, right? So do we just, rather than just softer hiring, do we go into outright retrenchment in jobs?
Well, I'm curious what that effect has on the markets then, Guy, because we've been talking about this a lot in terms of that we've seen these big swings from the currency picture, but the dollar hasn't actually necessarily moved. We've seen it in the treasury market, but we've seen the FX market almost split from what the bond market is pricing. And I'm curious what ends up happening on that front. It's a positioning story that we've been talking about in the show a lot.
So the dollar has been weakening. It's almost kind of happened behind the scenes almost as we focused on other asset classes. So there has been dollar weakness coming through. But this is a dollar story, is it an everything else story, I think is interesting. The dollar has been coming under pressure, but it's been other things that I've been watching. It has been the yen. It has been what has been happening with, I'm actually quite interested in the Chinese currency and what's been going on there. But the yen, I think, is really interesting. And And I'm wondering what you think Ueda's going to say. Does he come out Friday and sound hawkish? This testimony's there because they hiked rates and freaked the global markets out. So it kind of feels like we should be paying attention.
Well, absolutely. I think the BoJ really surprised that last meeting, right? I was hoping for a rate hike. I didn't think they'd go as far as shrinking purchases as well. We got both. And now this is going to be telling, right? Does he come out and say, we're happy with the way things have gone and we've got more to do? Or does he come out and say, we're going to be really super cautious? And I'd love to see the former. I mean,
but the data points us towards the former, don't they? The data are strong. I mean, we've got CPI still to come out, but the other data are good.
But that market panic, does that send the Bank of Japan nervous? Because they are having to unlearn decades of institutional inertia. So hopefully the former.
What I think is interesting here as well, Kriti, is that we're in a situation where we've all thought that with the end of QT, for the Fed, the Bank of England, the ECB, etc., that we were in a tight money era, that money was getting tighter. But the BoJ's been kind of still bucketing in the liquidity. If it turns around and stops doing that, what effect does that? Is this finally the moment where the era of cheap money comes to an end?
Well, let me put that question to you then. Give us some numbers here. Give us a range when we're talking about, we put so much effort on dollar yen, but when it comes to kind of it feels like dollar yen is really reacting, not just to the yen side, but to also what's going on in the treasury market. Give us a range here of how low the 10-year can go.
How low can the 10-year go? I mean, for this year, really, on the 10-year, 365 to me feels like an extreme low. But I think for the rest of the year, this is going to be more about playing ranges. So it's going to be changing your positioning on a tactical basis when you think things have gotten overexcited in one direction or the other.
Yeah. So what's the range for the 10-year?
I would say, I mean, it's rejected now going back through 4 a couple of times. So it does look like 4 is now going to be the top end.
Yep.
I think anything at 365, to me, that's where you start reducing duration again.
And what does the curve look like in that kind of scenario?
Curve, I feel, should be steeper. But going into year-end, we've seen how hard that is for that to happen and to persist. So I think there is a risk that we have this curve that keeps jumping around, particularly the short end, with data releases.
Does it matter that other central banks around the world are front-running the Fed when it comes to cuts? The ECB is one example. BOE is an example. The Riksbank tomorrow is another example. Does it matter?
Matter for who?
For the Federal Reserve. Is that a credibility question?
Absolutely not. The Federal Reserve is focused, as it should be, on its own domestic markets. This is certainly a change in that we're seeing emerging markets front-run by a huge degree and have probably almost finished their easing cycle. Developed markets are front-run to a degree, but the Fed is reacting to its own data, as it should be.
I'm going to have another crack at it now. Lauren Van Billion, is that right?
Yes, perfect.
OK, cool. We'll go with that. We're going with that. Portfolio manager and head of rates and FX for the global fixed income team over at Allspring Global Investments. Thank you very much indeed. Just remember, we've got some great coverage coming up. Jackson Hole, obviously, apparently the main event of the week. We're going to be watching Ueda as well, but we're going to kind of keep that one quiet. We're going to be looking at that much anticipated speech by the Fed chair, Jay Powell. That comes up Friday. Remember, Bailey also speaks. You've got plenty of other central bankers that are going to be speaking as well this week. So we'll be watching out for what they all have to say in aggregate. We're going to be talking about the totality of the central bankers this week. Anyway, what else are we going to be discussing? Warnings over the safety of a Russian-controlled nuclear plant in Ukraine. Zaporizhzhia we're talking about here. We're going to be focusing on that. We'll get the latest on that situation. Fighting very close in that area at the moment, so we'll get you an update on that, plus the wider picture in Ukraine and the impact of this German funding story. Kriti wants to talk about that this morning. The markets want to talk about that this morning. Rheinmetall already on the move as a result of the decisions coming out of Berlin. All that is coming up. This is Bloomberg. Good morning. Welcome to Monday. Negative start expected for European equities this morning. As you can see, we're called down by, when it comes to the FTSE, circa 0.5% at the get-go of trade this morning. Keep an eye on what's happening with Germany today. We've obviously been bringing you the news about what happened over the weekend with this new budget that has been agreed. We're already starting to see maybe some early indications of the effect that that's going to have on the stock market. Rheinmetall, the big German armaments company, produces tanks, armoured personnel carriers, etc., already, we think, suffering on the back of this. The early calls on the trade gate look like they are signalling that we could see circa a 6% drop for that stock this morning. So we'll keep an eye on what's happening there and the read across. The effect, obviously, here is in as much as we're seeing potentially Germany pulling back on defence spending related to Ukraine. Let's focus in on Ukraine a little bit more now. The International Atomic Energy Agency says safety at the Russian-occupied power plants in southern Ukraine, Zaporizhzhia, we're talking about here, is deteriorating. Saturday, we saw a drone strike. It exploded, we understand, around 100 metres from the plant's only remaining power supply line. This is affecting coke cooling, so we're going to be watching out to see the effects of that. Let's get an update on this, plus also what we're seeing on the ground with regards to the Ukrainian incursion into Russian territory. Tony Halpin joins us to discuss all of this. Tony, let's first of all discuss what is happening with the nuclear plant in Zaporizhzhia. The concern is growing that the fighting is getting closer and closer, and that this is a significant risk that we need to be worrying about. How worried should we be?
Yeah, good morning, Guy. The IAEA, as you've noted, have expressed concern about what's going on there. The Director General, in fact, Rafael Grossi, says he's extremely concerned by what's happening and is urging all sides to show maximum restraint. This is Europe's largest nuclear power plant. It's been on the front line of confrontation between Ukraine and Russia pretty much since the beginning of this war. And every time there's a flare-up in tensions in that area, of course, it causes great concern among the IAEA monitors who are at the plant. So this is another one of those instances, and it comes at a time, of course, of heightened conflict in other parts of the battle zone between Ukraine and Russia.
Well, Tony, talk to us about those other parts of the battle zone. We know that Ukraine has said it destroyed a second Russian bridge. Walk us through that Russian reaction, that shock factor.
Yes, this is quite significant because Ukrainian forces are basically taking out bridges that can be used to resupply Russian troops in that part of the Kursk region, which is where Ukraine has entered almost now 2 weeks ago. And so that's going to make it difficult for Russia to push back that Ukrainian incursion. The Ukrainian President Volodymyr Zelensky said late last night, in fact, that the goal of this operation was to create a buffer zone inside Russia to protect Ukrainian communities on their side of the border. And that kind of implies that Ukraine intends to stay there for some time. And so we can expect, I think, heightened conflict in that area as Russia tries to regain control.
Tony, thanks for the update. Greatly appreciate it. Tony Halpin joining us out of Dubai. Let's talk about what is happening in Germany and how it folds into this narrative. One of the German papers is reporting that the government will no longer grant new requests for aid to Ukraine. This as Berlin seeks to rein in spending. We've seen details coming through of the budget, we think, over the weekend, and that appears to now be agreed. Germany is one of Ukraine's greatest supporters. So let's talk about why, potentially, we are dialing back support here. Ollie Crook joining us out of Berlin. Ollie, try and answer that question for us. This is a critical moment in the war, and yet Germany seems to be walking in the other direction.
Absolutely, Guy. I mean, this is the fundamental question here. The question is, how long could these countries continue to be writing checks for years and years and years? And really, it comes back to that constitutional crisis we had in Germany last year around the budget. The money is just not there. There is the political support. There is the political will in Germany to continue to support Ukraine. But what we understand now from some of the German reporting who have seen a letter from Christian Lindner, the finance minister, what happened was the defense ministry asked for an additional 4 billion euros next year to give to Ukraine to start help with that funding. And Lindner said, no way, we basically cannot afford to do it. We're not going to be doing that. So there will be no additional funds going to Ukraine. The question is here, what does that mean in terms of the current commitments? Those commitments will continue to move forward. Those will always continue to be fulfilled. And it's important, Guy, because Germany is the biggest single contributor to Ukraine in Europe, the second biggest in the world after the United States. And when you think about the sums that we're talking about here, so far, Germany solo has committed 15 billion euros to Ukraine. As far as their contributions to the EU-wide efforts, that's another 8. When you look at it, what it means in terms of the spending going forward, they're going to have their contributions to Ukraine into next year to 4 billion euros. And in 2027, Guy, that drops down to about 500 million. So that is really the concern there for the Ukrainians on the front lines.
Well, Ollie, what kind of precedent does that set for not only other European nations, but other countries around the world, including the United States? Political reporting, there's already pushback within the Trump campaign pointing to that pullback in spending from Germany. All countries have tight budgets. Yeah. What tone has Germany set?
Completely. So listen, let's just say first of all, because this is sort of interesting, particularly when we see what's going on with Rheinmetall in the pre-market and some of the defense companies. This is not a question of whether Germany is going to do its own military spending. Remember, they already put aside 100 billion euros for their own military spend. That is going to continue to happen. But the question is also, well, what can happen maybe at the EU level? There's still money that can go there. The question there, as you point out, there is not fiscal room in Germany because it's self-imposed because of the debt break. But for France and for, say, Italy, for example, they're way outside of the EU spending rules. So you're going to have some constrictions there. The question around all of that with the United States and the EU has been the Russian assets. That has been sort of what we have been seeing as the solution to that problem going forward. And that's what Lindner is saying, is that basically we're not going to give more money to Ukraine, but we have devised this infrastructure and this sort of architecture around the Russian assets in order to be able to continue to fund Ukraine into the future. The problem is they haven't really worked that out entirely. We don't have that sort of final structure for that. They say that they're going to have it all figured out, the G7, by the end of this year, but that is sort of what Ukraine is going to be relying on, and the G7 are going to be relying on to fund Ukraine going forward.
In terms of, just put this in context for me, and why this is so important and why Germany is where it is and what it tells us about what is going on within the coalition, Ollie.
Yeah, well, listen, this is a question of the spending, and in Germany, spending is always a big deal because they take a lot of a lot of different views on how to go about it. You have the three parties within the German government right now who have very different ideas, one, about how money should be spent, but two, where that money should be coming from, and three, whether or not there should be a debt break. I mean, the Greens and the Socialists, Scholz, have talked openly about wanting to get out of this, get rid of the debt break. We know in what kind of difficulty the German economy is in, and they all have very different ideas of how to solve that. Obviously, Scholz is very concerned with the welfare state and that sort of thing. The Greens want to take that money and sort of plow it into sort of energy transition. And Lindner is there saying basically, no, we need to be paying attention to where we're spending this money and what we're doing with it. So we have a sort of early draft of the proposal within the coalition. That is the first step. That is the good news. That is very, very important. The problem is, Guy, you still have about 12 billion euros missing within that proposal. It still needs to go to the Bundestag. It needs to be sort of deliberated on. But it really speaks to the heart of the issues. And put into the political context, Guy and Kriti, is that you have an election, not this weekend, but the weekend coming up in Germany, across the eastern parts of Germany, state elections where you see this huge upsurge in the far right and the far left, all these nationalist movements. And so you can understand when you say, hey, a population saying we are in big trouble, we don't want to send more money to Ukraine and to refugees and that sort of thing. This is what the coalition is up against.
Well, let's talk about another facet of this story as well when it comes to kind of tensions. We know that there's been a lot of mystery around Nord Stream 2. It hasn't exactly gone away. Some reporting last week from the Wall Street Journal about who, in fact, was behind some of the issues with the pipeline as well. Now it looks like Donald Tusk out of Poland is speaking out about it. Walk us through kind of the background and the tensions emerging between Germany and Poland right now.
Yeah, I mean, we're almost 2 years away from when this happened, which was in September 26, 2020. Obviously, the pipeline exploded, and, for most people who were observing this had basically no idea who this could have been. Was it the Russians? There were people saying all kinds of things. It sort of has coalesced around the idea that it was a Ukrainian sort of sanctioned thing. We have the Germans themselves saying, issuing an arrest warrant for a Ukrainian that had been living in Poland. And as you can see on the screen there, Donald Tusk basically not really denying anything, but just saying that to all the initiators and patrons of Nord Stream 1 and 2, the only thing you should be talking about today is apologizing and keeping quiet, not going into this about whether or not the Polish and the Ukrainians sort of sanction this. The heart of the matter here is that the former sort of head of the German intelligence services saying that basically the Ukrainians must have been either aware and sanctioned this at the top level, but so too the Polish. Now, that obviously is a very contentious claim given the sort of nature and the fraughtness of, blowing up a pipeline off of Germany. But the question is now, basically, are they going to be able to sort of resolve this and bring down the tension? Everyone is being very sort of delicate in terms of the signaling around this, but that's sort of Donald Tusk coming out pretty strong, saying that basically unapologetic and not really denying anything.
All right, Bloomberg's Oliver Crook, we thank you so much walking us through the multifaceted kind of story within Ukraine, Germany, and Poland. We thank you so much. This is fascinating that we are already seeing a market reaction to this guy, even though we've seen these budget talks kind of in the works for a while, now actively affecting Ukraine. To me, I think the key piece is what tone it sets for Europe and for the United States. Are you starting to see that goodwill fade?
Potentially. We don't know yet, and we don't know what's going to happen with a Harris administration and what line it will ultimately take. Is it a continuation of a Biden administration, we don't know. What we do know is, though, that if Germany is signaling it's going to spend less, the Trump administration, were it to come into force, will use that as a significant kind of messaging tool to basically say they're not, we shouldn't.
Yeah, and I think the other piece of this is in relationship to Ukraine as well. When we talk about the rearmament story, if the argument is that we're hitting budget deficits, we don't have any money, we keep hitting these constraints, does the funding to NATO story disappear as well? Does the building your own military capabilities story in Europe also disappear outside of what's going on with Ukraine?
So how does Germany manage this if the Trump administration were to come in and say, you've got to spend 3%? Do the sums add up? What gets cut? And this is the question that Europe is grappling with right now. Were it to have to do so, where does the spending come from? Is it more debt that we ultimately see issued, and at what level? Is it at a national level or a supranational level? If we do have to see cuts elsewhere, where does that come? Is it through the welfare budget? Is it elsewhere? Does the green transition story suffer as a result of the rearmament story? This is a question of moving the chairs around. Yeah. Who gets a seat at the end of it remains to be seen. We don't know if there's enough money. We don't know what the targets are going to be at this point. At the moment, it looks like Germany is making a decision, but will it be able to stick to that decision and not spend this money?
Well, I think the other elements that we're talking about this in Germany, France is still dealing with a massive deficit. We're waiting for leadership there, expected to happen in the next month or so. We're seeing in Italy, this is a big part of Giorgia Meloni's platform as well. And Norway as well is one of the biggest kind of ramp-ups in terms of the European economy. And I feel like in the next couple of months, we're going to see elements of how can't they actually manage this? Well,
have they got the money, and where does the money come from? And is it coming from another pot, or is this fresh money, i.e. being raised through debt? I'm going to save Kriti's voice for a moment. Let me read this. Porsche agreeing to rescue the embattled, again, German battery maker Varta. This is part of a debt restructuring deal with lenders. We'll talk about your stocks to watch next. That is coming up. We're counting you down to the open. The close is quite some way away still. This is Bloomberg. Probably 14 minutes in the start of trading here in Europe. Looks like actually the risk-on theme that we've seen in equity markets over the last few days may be starting to run out of a little bit of steam. I have to say that Asia is maybe one exception. We've seen quite a lot of price action this morning, much stronger yen this morning, equity markets on the move as well. Let's figure out why. Paul Dobson, Bloomberg's executive editor for Asia Markets, joining us now. Paul, here in Europe, maybe in the States as well, feels like a quiet start to the week. We're building up to a big end to the week. The crescendo, obviously, Jackson Hole and also the BoJ testimony. But Asia seems to have come out into the beginning of this week with something of a bang. Why?
Yeah, good morning, Guy. That's exactly right. We thought that the highlight of this week was going to be 10 p.m. for us on a Friday when we'd already gone to bed. But actually, Asian markets, they've been on a gathering momentum over the past several days and really starting to kick higher again today, right across especially Southeast Asia, but also the Korean won having a particularly good day. The thinking here is basically twofold. One, the Federal Reserve is getting closer to cutting interest rates. We're pretty sure that we're going to get a start in September and a steady pace of declines from then. Maybe not the dramatic 50 basis point cut that everybody had talked about, but nonetheless, sort of that lower interest rate dynamic that pulls down the dollar as well and lifts every other boat. And secondly, within that, the US is not really headed for a recession, judging by the latest data. The economy still looks reasonably strong as well. Demand for imports is holding up, and therefore exporting nations, which we see across Asia, are going to benefit. So there's those two prongs that have been helping the Asian currencies and markets this morning.
Paul, you mentioned it there briefly, that case for 50. Can you walk us through what that case actually looks like? I think Goldman and arguably some folks at JP Morgan still sticking to that. But why? What is the difference that 50 makes in September over 25?
Sure. I think that 50, betrays a little bit more of panic or concern from the Fed. 25 basis points, you think they're going to cut because they want to cut, because they feel they can cut, because they think that the inflation dynamic is at a sort of stage in the cycle where it's okay for them to make rates a little bit less restrictive and start to ease off a little bit. I think the flip side of that, if you do a 50 basis point cut, it says, hang on a second, we're a little bit worried that maybe we've fallen a little bit behind the curve or that the economic data is looking bad. And I think that why the Fed is cutting is very important for financial markets and for that dynamic, because if they're cutting from a space of, kind of comfort, that conveys a certain degree of confidence. If they're cutting from a place of concern, then that's a different message as well. Now, what I would say is that the market is pricing in 100 basis points of cuts over 3 meetings through to the end of the year. So still be factoring in at some point a 50 basis point cut in there at the moment. So hasn't all come out of the mix yet.
Paul, so how much volatility should we expect around Friday? What's the market looking like in terms of the setup on the options front? What kind of numbers could we be looking at? Because Jackson Hole can be a complete snooze fest, or it can produce some big numbers.
It can, and Jerome Powell is pretty good at threading that needle and saying as little as possible to leave the market comfortable. But I think what we've seen over the past 2 weeks is that there is scope for volatility. The last thing that we want is what we're seeing right now in financial markets, which is as well as those Asian currencies getting a lift, the yen accompanying them now and starting to take the lead. And because the yen and the unwind of that carry trade was the cause of such volatility last week, people are going to be watching that very carefully in the run-up to Jackson Hole.
All right, Bloomberg's Paul Dobson, we thank you so much. Of course, if you want to get more analysis from him and the team, just type in MLIV Go on your Bloomberg terminal. You can get that very easily. I think it's interesting what he's talking about there. You're talking about the yen, you're talking about these cuts. What I'm talking about from a market perspective, of course, dollar yen is in focus. But to me, it's all about the bond market. I'm really curious to see just how much volatility you see in the bond market. Do we see a 20 basis point move on Friday after Powell's speech?
Powell, I think, is going to try and give as little away as humanly possible. So what is, I think you've got to look at positioning, and then you've got to figure out what the data are kind of guiding Powell towards in terms of what he's going to have to say. That 50-25 debate is still on the table. We're going to see another payroll report before we get there. Is Powell going to want to commit anything before we see that next jobs report? I would be surprised.
I'm still waiting for the commentary on what is a, quote, bad payrolls report. We had this conversation with our guests. And what's normalization? If anything below 200 tends to be kind of pre-pandemic numbers. Is that what this is, or is this a actual slowdown?
I think we've already learned the answer to that question, didn't we, from the volatility we saw a couple of weeks back? Anything below estimates is going to freak the market. The market is clearly terrified about a recession, and I think that's going to be something that Powell is going to be aware of as well. Stocks to watch. Let's talk about them now. Let's figure out what we're looking at before the open. Joe Easton here with all the details.
Morning, guys. So we're keeping an eye on the embattled German battery maker Varta today, which has got news of a restructuring and an investment from the car maker Porsche, which is really well needed at the moment. It's part of a €60 million capital raise, with the majority holder of Varta also taking part as well. But more important than that, it will cut their debt by around €200 million. As we can see from the screen here, it's been a really volatile stock over the past 3 months, down at 68% almost. And if we look over a longer term chart, it's been absolutely hammered. One of the worst performing stocks on the European market, down 97%. This is going to be good news for the company. Porsche, meanwhile, potentially getting a chance to expand their battery output. Varta are actually more known for the batteries that go in things like AirPods and other Apple products, but potentially the car industry, their next market as well. Then we're looking at Ericsson, a bit of M&A in this one. They're offloading one of their units. Now, this is the call routing business over in the US called iConnective. It's around $1 billion. They're selling it to the investment arm of Koch Industries over in the US, run by Charles Koch, of course. Now, this sales process began back in 2020, so it's taken a long time to get a deal over the line. Back then, it was said to be worth up to $2 billion, so it's a massive discount on where we were in terms of the reports on those initial deals. But Ericsson does need a boost. It's trying to lift their margins, reduce costs amid a decline in some of their 5G tech sales, orders slowing down. And this stock has been an underperformer as well. We can see over 3 years, down 25%. It needs a boost. Potentially, this could be it this morning. Then finally, we're going to look at UK home builders once again. Now, the home builders are seeing a boost in the number of people going onto websites looking for new houses, according to Rightmove, which has published its numbers today. They reckon that 19% more people are looking at new houses alone since the Bank of England rate cut, which was only actually a couple of weeks ago. As we can see from the screen, these stocks having a decent year to date, but it's a long way to go in terms of recovering the slump that we've seen. They're still down around 50% since the rates started going up back in 2022. That's the main issue, mortgage rates coming down. But also, Rightmove does say that pricing is improving. They think prices, house prices, could rise around 1% over the next year. They previously said they would fall 1%. So there's a double boost, more demand, more people coming on, prices getting a lift. As we can see, as I say, a long way back for that index in terms of the home builders, but potentially a bit more positive today.
Joe Eason, thank you very much indeed. Joe covering many of the stocks that we're going to be watching at the get-go of trade first thing this morning. Defence stocks, one area maybe we're also going to be casting our eye towards this morning. Looks like we could see some potential weakness in names like Rheinmetall, but it's not only Rheinmetall. Names like Leonardo could be under pressure as well. Maybe as we see reduced spending coming out of Germany. These stocks have had a great run, though, Kriti, and I think that's kind of what we need to bear in mind here.
Taking a little bit of the momentum out of these stocks as well. On a fairly kind of risk-off day, it feels like. I think this is really interesting, though. Do we start to see the buying going into the rest of the week as opposed to right off the bat today?
So it's been risk-on for the last few days, hasn't it? We've sort of come through that period of turbulence, then the market's then investors have piled back into the market. So it's been a kind of really strong momentum story. Does that begin to run out of steam? Maybe investors are a little bit more cautious as we get towards Friday?
Yeah.
We're going to find out. At the moment, this is what positioning looks like, negative. Going into the start of trade this Monday morning, looks like we're going to see a little bit of softness, not a great deal of softness. Maybe we're just going to flatline as we start this week and maybe look for the catalysts that are going to guide us towards the end of the week. Anyway, the market open is coming up. This is Bloomberg. Monday the 19th, couple of minutes to go until the start of equity trading here in Europe. Looks like we're going to see a fairly soggy start. We're not going to see a positive start, I guess is what I'm really saying. Let me talk about the legacy out of Friday and then we'll kind of address what's happening with futures this morning. European equities actually kind of rolled over and then had a little bit of bounce into the close. That momentum looks like it's going to struggle to continue on Monday morning, which is interesting in as much as actually US futures picked up a little bit. Sorry, US stocks picked up a little bit into the close stateside Friday, continuing what was been a decent run. US futures are looking a little soggy as well this morning. So let's talk a little bit about what we're seeing in terms of the European future picture. This is what we're seeing, basically flatlining. The Stoxx 600, the Stoxx 50, expected to go nowhere. FTSE futures are down by 0.3%. They firmed a little bit. S&P futures going absolutely nowhere as well. Is it a calm start to a big week? Does the crescendo come Friday with Powell and Ueda? And we're kind of building up to that through the data that we get kind of Wednesday, Thursday, Friday. That appears to be the setup at the moment. So a quietish start, certainly here in Europe and in the United States, Kriti.
Yeah, a couple of individual sectors that we're going to be watching as well. Defense, of course, is going to be top of mind. We're already getting some of the early TradeGate data that we are seeing out of the likes of, for example, Rheinmetall. Do we see a read-through into the likes of Leonardo, Saab, Kongsberg, as well as coming just kind of the pullback in some of that German funding story for the rearmament of Ukraine and some of that aid coming out there? Do we see a ripple effect elsewhere? Another story we're keeping an eye on is Porsche and Varta. Of course, is a big stake that Porsche is expecting in the lithium-ion business specifically. We're going to keep an eye on that, as well as the UK home builders. Looks like some positive data coming out of Rightmove. A 19% jump, Guy, when it comes to potential sales. Does that momentum continue? Is that something that gets priced in at the European Open?
Andrew Bailey, the Governor of the Bank of England, is going to be speaking Friday at Jackson Hole. We'll obviously bring you that and all the other news on the central bank front. But it's time for the opening trade. Let's show you what the numbers look like this morning. We're expecting something a little soft, but not that soft. Basically a flat line, a wait and see, a sit on your hands start to the week. And I think that's what we're already getting in terms of the numbers. There you go, the FTSE 100 barely budging in terms of the early performance that we're seeing there. You've got the IBEX in Spain up a little bit, but not by much, 0.2%. The 600 is absolutely flat. This is a wait-and-see kind of a market. After a decent run, a decent recovery, we've now got some big catalysts coming up, but they're not for a couple of days. So the market may be taking a slightly more cautious approach this morning. It has been risk-on for the last few sessions. The market's been back with a bang, but that looks like it's maybe run into the sand a little bit this morning, Kriti. In terms of the details, what are we watching?
Well, we're going to see some individual kind of movers. When it comes to the biggest weights, you are seeing tech kind of on the back foot here. So your ASML, for example, is going to be weighing right alongside Novo Nordisk, which I think is interesting when we're talking a little bit about that rotation trade. You can see your heavyweights, your sensational six, if you'll call them that, pulling back. But it looks like LVMH seems to be, at least from an index perspective, one of the upside movers that you're seeing higher by about 0.5%. So that's one of the ones that we're going to be keeping an eye on. Alongside Kering, by the way. So you are seeing some of the French luxury names actually outperforming, which again, again, is not one that we often talk about that often. But to me, that kind of screams rotation trade. To me, I'm also keeping an eye on some of the defense movers. Of course, BAE Systems is our early indication. We're still waiting for some of the German names to start to trade early on, Guy. But it's down about 2%. It looks like in the opening trades when you look at those BAE Systems. Is that kind of a pre-warning of what's to come when we see some of those other individual stocks in the defense space?
Let's watch some of the movers. Keep an eye on what is happening here. As Kriti says, defense stocks are absolutely front and center this morning. We're going to be watching that space very, very carefully. But as you can see, if you've got good eyesight, it is some of the more defensive names that are coming through. Luxury is back. We're certainly seeing that coming through. It's interesting, though, that we are, as Kriti says, seeing some of the tech names coming under pressure this morning. That is where the weight appears to be this morning. There's a few pharma names that are soft as well. So it's not a clear kind of an easy sort of to determine market, I think, this morning. You've also got to remember we are right in the middle of August. Like, how clear a signal are these markets really sending? Yeah,
low volume, low liquidity. I think when we get some of that German pricing and more of the kind of Nordic defense names as well, we're going to see a little bit more kind of come through in this market. We'll keep you apprised as we get some of those opening trades hitting the wire. In the meantime, let's go right back to the macro. Goldman Sachs over the weekend lowering the probability of a U.S. recession next year from 25% to 20%, citing last week's retail sales and jobless claims data. But if the August payrolls report comes out as a positive, Chief Economist Jan Hatzius may actually tweak his view. Take a listen to what he had to say.
Conceivably, there can be points in the business cycle where you might want to say the 12-month forward probability is less than 15%. I'd be reluctant, though, given the political uncertainty and the uncertainty around economic policy, to go significantly below 15%.
All right, Goldman's chief economist Jan Hatzius there speaking about it again over the weekend. 25-20%. If things look even better, that comes down to 15. Let's get another perspective here. Kareem Chadid, head of EMEA investment strategy over at BlackRock, joins us around the table. Kareem, is that argument plausible? Do you believe that recession is risk is diminishing?
Well, we are still with the base case that there won't be a recession. And when I look at the events of the past few weeks and the numbers you mentioned last week with the retail sales, with the better jobless claims data, I do think it's pointing in that direction. So we have a softening. If we zoom out, we have a softening of the U.S. economic picture, but not a move towards recession. And even when you look at some of those labor market data, and of course we still have one more payrolls before the big September FOMC, even when you look at that labor market data, that pickup that we saw in unemployment, we don't see it as a sign of recession increasing. We just see it as a side effect of a bigger labor supply boost.
So what's your red flag here? If things are all looking great and rosy and the economy is expanding, there's no recession risk, as you say, what changes that view?
Well, of course, we had the pretty neat inflation number as well with the two-handle CPI, below 3% CPI release in the U.S. And this inflation has been the big theme of this year. So I think what changes that, and this is not a 1-2 month risk, it's more going into next year. Any signs of inflation reacceleration that are not really priced in by markets, I think, can lead to some volatility.
Volatility has come down really sharply. We saw that big spikes come back down again. The VIX has kind of completely tumbled back down to kind of almost where it was before. It's equity risk on again. That seems to be the trade of the last few days. Is that the right thing to do right now?
So we're still overweight U.S. equities. And even when we had the volatility earlier in August, and you're right, August we're back up 6%, I think, for U.S. equities now, despite all that volatility. We're still overweight equities, and we have our overweights biggest on the U.S. and Japan. And really that is underscored by what we're seeing in earnings. Earnings season has almost wrapped up in the U.S., and we're starting to see signs of breadth beyond tech. So the numbers are in 2024 are looking a bit more diverse. It's not just tech. You also have healthcare doing well, a little bit of pickup in consumer sectors as well, although definitely still on the weaker side. Whereas 2023 was all about tech concentration.
Yep. What impact did the volatility event, though, have in terms of the way we should think about this market? You can't just ignore it. I agree. We completely round trip. We're kind of back to where we were before. Can we ignore that, though? Was there a signal in there that we should be maybe taking forward?
I think there's a couple of lessons there. First, around positioning. So we are still in an environment that is volatile, even though it's risk on.
Yep.
So we are overweight US equities, but volatility is higher than it used to be, pre-pandemic. And I think this is the type of market where you need to be aware of positioning, be aware of carry trades. The technical washout that we had in positions earlier in August, you had signs such as the net short yen futures that were getting quite extreme. So I think being on top of your positioning dashboards, your flows, your crowded positions is important in this environment.
So a technical washout, yes, and feels like the currency space, which kind of rippled effect into the stock space. Where's the crowded trade now?
So when we look at our positioning dashboard, tech still looks well owned. I wouldn't necessarily say it's crowded because earnings are still positive, because ultimately when you think about crowdedness, you also need to think about fundamentals, whether fundamentals back up that trade or not. Then when you look at some of the so when we look at the positioning washout that we had earlier in August, we do see that the majority of that has unwound. So things look decent now from a technical perspective, but I think you need to watch out for it going forward.
It's interesting that you talk about the tech space, because Deutsche Bank made a similar but almost contradictory argument in that they actually said that even though now the valuations are matching the earnings, they said that in a negative light, not a positive one, as you're highlighting. But I'm curious about the bond market story here, because it feels like so much of that money that was hedged, say, in Japanese assets has basically piled in to the treasury market, pushing this yield lower. What is the ceiling here when it comes to the 10-year?
So we still look at the Treasury curve as a yield steepening view. So I do think that we have some of that. The risks of yield curve steepening from here are clear, especially 10-year plus, as some of that money repatriates back to higher yields in Japan. So that foreign buyer of U.S. Treasuries becomes less. And again, this is not going to happen in 1 week or two. It's more of a slow risk over time, which would point to a steeper yield curve. And then you also have higher fiscal spend that we're expecting from the US over the coming years, which adds to that yield curve steepening view.
A lot of the guests that have been coming on and sitting in that chair have been signaling that they like the defensive aspects of markets like the FTSE 100. What do you think?
So we upgraded UK equities because of that view. There's also a more stable policy backdrop in the UK, and you've started to see it in the flows as well. So I analyze ETF flows forensically, and we've started to see a pickup in even from foreign investors, so non-UK domiciled investors buying UK equity ETFs. Those defensive tilts in the FTSE 100, but also the financials tilt, which I know it might sound funny to talk about financials in the context of a rate cutting cycle, but this is not the old style of rate cutting all the way back to zero. So we do think that higher rates for longer, even with the rate cutting cycle, would still support the banks and the financials.
Okay, let's try and answer that question. Where do you think rates do end up? Do they? And what do you think the market is positioned for now? And what do you think the reality of the situation is going to look like? How far can the UK cut rates?
So with the UK, when we look at the market pricing for rate cuts, which is still under 2 by year end, and we already had one cut behind us, that still looks a little bit on the hawkish side, especially when you compare it to the other major central banks and the pricing of the ECB, the Fed. The BoE pricing remains the most hawkish of the three, which doesn't feel very justified. Sure, the UK data, there's some brightness in the economic outlook, such as the numbers we got this morning, but you have inflation coming down, and inflation has hit the 2% target. It could reaccelerate from here, but it has hit the 2% target. So we do see room for the BoE to deliver on that market pricing and even go a little bit further, which is a tailwind for UK assets.
It's interesting that we're talking about cuts being priced in for the BoE, talking about weakness perhaps in the UK economy, and yet you're looking at cable at 129, arguably 130. You're looking at the euro at 110. Walk us through the mismatch, or what it feels like is a mismatch between the economics and the safe haven aspect almost of the pound.
Yeah, I mean, I think the pound, there's an element of that rate pricing. So when you have a bit more, less of a dovish pricing, that can feed through to the interest rate differentials, which supports the pound. There is also a reduced political risk premium that helps the pound do better, because markets typically trade on uncertainty. So when you have higher election uncertainty, that weighs on the FX. When you have lower election uncertainty or a more certain outcome, that also reduces the risk premium, which leads to some bids in the currency.
So is the strength that you're seeing, are we still talking about this kind of labor honeymoon? Is that what's happening here?
Well, that, and also I think that the tailwind for the UK, because yes, the UK, the starting backdrop is that the UK is coming from a weak spot in the economy. But here, this is the typical thing with markets where if expectations are really poor, less bad news tends to be good news. And this is, I think, how we can talk about the UK data that we're seeing.
Karim, nice to see you. We'll see how it goes. It's going to be an interesting week. Karim Jadid, head of EMEA Investment Strategy, joining us from BlackRock. Let's take some of the core stocks that we watch here in Europe to get an idea of what is happening. This is what the picture looks like this morning. As you can see, luxury seems to be on the front foot. You've got LVMH and Ferrari both tracking a little bit higher. Elsewhere, weakness in the pharmaceutical space. You've got Novo softer again. But also, as we've been highlighting, weakness in some of the tech names too. You've got ASML a little softer. Schneider in this kind of the data center trade a little softer as well. You've also got some of the defence stocks a little softer. Let's find out the details of what is happening there. Joe Easton, back over to you.
So as you say, Guy, all of these stocks really weak today. We're seeing Rheinmetall down around 4%, Hensoldt in Germany as well, and Renk, all the German names, down more than 3% at the moment. This coming from this story in the weekend press that potentially Germany could be looking to rein in spending in terms of the money that goes to Ukraine. We'll have to wait on some official confirmation of that, but that was the report. We can see those shares really heading lower, and it's also feeding through into the other European names as well, in London and Sweden as well. We've got Thales on the screen there, that one over in France, down almost 2%. BAE Systems in the UK, Saab as well. All of these shares lower on this report. Obviously, it is an ongoing situation. We'll wait to see how that develops. But defence clearly under pressure this morning. And we're going to take a look at another stock under massive pressure. This is Varta, absolutely hammered, down almost 80%. Now, they have got this share placing, this investment from Porsche and also the majority holder. But it means massive dilution for existing shareholders. A lot of them are going to get wiped out. This is the German battery maker that's got big debt problems at the moment, making the AirPod batteries, also potentially looking at EVs as well, but absolutely hammered. It's a dilution for shareholders. Now, this one a little bit off radar, but we've got DSM in Amsterdam and Kering in Paris going the opposite directions because there is a technical adjustment on a couple of indexes from stocks. I'm waiting to get confirmation officially, but traders telling me this is to do with an index adjustment that will see Kering potentially stay in one of the key indexes and DSM miss out. That's what traders have pointed to, but a couple of the biggest movers on the stock 600 today. Then we got Plus 500. This is the UK CFD trading company saying that they're seeing an increase in demand due to the higher volatility that we've seen over the past couple of weeks, and they're actually doing a big share buyback. They've got around $1 billion on the books at the moment, allowing them to return more cash. That's the best performer in the UK today, up 5%. It was up 7% at the open, so a decent move on that one. Then we've got a couple of morning calls. ArcelorMittal gets an upgrade at Barclays. That one's been hammered by the Chinese real estate issues. It's a steel maker, one of the biggest steel makers, and that could potentially mean some value in the shares, down around 20% over the past month. And then Nexans over in Paris, it's cable manufacturing. Exane, oh, excuse me, I'm getting my brokers wrong there. It's Goldman Sachs downgrading that one. Downgrading Nexans in Paris. That one's down 3% thanks to Goldman. And that's a big mover over in Paris this morning.
All right. Joe Easton from our equities team, we thank you so much for walking us through some of the major moves that we've got. I mean, to me, it's still all about the defense story, Guy, that we are starting to see this major move. Of course, the German defense makers taking a bigger hit than some of their peers across Europe, but that is the sector underperforming this morning.
It is. It's had a great run. I think context is always really important here. These stocks are up massively this year. In the context of that move, the move this morning are relatively small. So after such a great run, any kind of a wrinkle is going to cause problems for these stocks. And you are certainly seeing that this morning in terms of the performance that you're seeing on on the screen in front of you. As you can see, Rheinmetall down by 3.8%, 3.9% right now. In terms of the volume expectation today, it is likely to be quite an interesting one. Actually, maybe we'll see a little bit of a tick up going in towards the end of the week. I think it's going to be a relatively quiet start.
We should also mention, just from a macro perspective, traditionally when you have these kind of German budget conversations, the fact that these conversations are done and cleared up and locked away should be a positive for the market from an index level, and we're not seeing that this morning.
No, we're certainly not seeing that this morning. There are other things going on as well.
Yeah.
You've had a really great run. Again, just the context is important. You've had a really great run. Stocks have had a really good move over the last few days. They bounced back really strongly. Volatility has gone. The VIX went up to 60. It's come back down to less than 15. It's a kind of more of a risk-on environment. Volume's a little bit low, so you can push things around a little bit more. So it's interesting to see what is happening here and how the traders have responded and come back into this market. So the signal, I think, here is fascinating. You've got that kind of tailwind. You've got mid-August. You've got some of the politics stories being folded in as well. Yeah. You're going to get more of that later on this week. I don't know. Monday morning, I think it's a really difficult week to read.
It's a light volume, it's light liquidity, to your point, and I think that's probably why the bond market and even the currency market actually feels like you're seeing bigger moves there. A 145.7 on dollar yen here, 110, 129 on euro and cable, respectively. Those feel like pretty big moves, given that no one really may be at their desk this morning. I think it speaks to that kind of autopilot story.
Yeah, the market continues to answer the question, which is going to move the market more, Powell or Ueda. I think at the moment it feels like the yen is the story.
Yeah.
Yen is on the front foot. That is where we should be watching the action. In terms of the single stock story, I want to take you back to what is happening with the auto space as well. We've had this battery story out of Germany that we need to focus on. Varta set to get a little bit of a recharge. Porsche agreeing to invest in the troubled battery company. It kind of needs to in some ways. We'll get more details on what is happening here. Plus, it's a big week also for Chinese automakers as well, the EV makers. We're focusing on that story as well as head of their corporate reports coming thick and fast throughout this week. That's next. This is Bloomberg. 21 minutes into the equity market session, this is the picture you see in front of you. You have to bear in mind the context of last week, which was incredibly strong from an equity point of view. Today we hold our ground, we wait, we look for the next catalyst to come through. You are seeing movements in defence stocks this morning. That is one of the stories we'll come back to and keep you updated as to why we're seeing what we're seeing this morning. It all relates back to the German budget and German defence spending, particularly on Ukraine. There's another German story, though, that we should probably be focusing on too. Porsche has agreed to become a shareholder in Varta. Now, this is providing fresh cash to this embattled German battery maker. It's part of a debt restructuring deal with Varta's lenders. Let's get an update on what is happening here. Danny Lee joins us. Danny, walk us through what is happening here and why Porsche is having to make this move to protect its relationship with Varta.
Yeah, this is Porsche having trouble yet with another supplier. This time, what it's doing is rescuing Varta from effectively financial peril and solving an issue that has been rumbling on for many months now with relation to Varta, which helps supplies batteries. And so it's a fascinating turnaround for a German stock, a green stock that had so much promise and at one point was worth over 5 billion euro, but right now it's worth around 165 million. And with this deal done with Porsche will take a 32% stake alongside Varta's majority owner. The other lenders will carve out the rest of the shares there as well. But yeah, it's really fascinating because of the broader troubles we are seeing with battery makers in Europe. There's weaker EV demand, and therefore it's hurting the commitments, the billions that had been laid out in promises to invest and localize in production of EV batteries in Europe. And therefore, someone like Porsche is trying to protect its position, particularly where it wants to have better control of its own supplies and a future supply chain.
How much of a function of the tariff story is this, Danny, especially when we're talking about these ion batteries being one of the top exports coming out of China altogether? How much of this is a reaction or some sort of kind of protection against the impact of tariffs in the future?
Yeah, it is fascinating. And I think for the Chinese battery makers who continue to look at investing in Europe to localize, it's a bit of a weak spot for the the kind of native European companies who've got to come from a very low base to try and catch up. And we see the impact of EU tariffs already on Chinese EV brands. And we see a data point suggesting a 45% cut in sales month on month from now, where we see tariffs starting in July. So clearly there is a bit of an impact there, and probably good news for Brussels that there's a bit of a discouragement there for sales of Chinese imports.
Danny, let's talk about the Chinese automakers in a little bit more detail. We're going to see a lot of earnings numbers coming through this week. What clues should we be watching out for in terms of who's ahead, where the strength is coming through from, and how these companies maybe are positioning for a more aggressive tariff story from the rest of the world?
Yeah, I mean, we've seen a couple of Chinese car companies, particularly XPeng, and we've also seen Geely. They've both been looking at Europe as a source of growth. I think the challenge here is where someone like Geely, who has been very much looking at exports as a big growth point, they now have to rethink and reassess what these EU tariffs mean. And because where they were producing out of China to export into somewhere like Europe, they now have to think, how did we reaccelerate our plans to maybe enter Europe and do more production locally? So clearly, what the management has to say of these companies and how they will adapt in the future will be fascinating.
Danny, let's just flip this around a little bit. The European companies have for a while now seen China as being a huge source of revenue growth. And I'm wondering whether or not that continues. One of the papers this morning, I can't remember which one, was posing the question whether or not China has become a black hole effectively for European car companies. Huge investments already gone in there. Given what we're going to learn this week about the strength of the Chinese automakers, how big a problem is China for the European manufacturers?
China is a real problem when you look at how the European automakers have had such a lead over the Chinese brand for many, many years, but are now putting their heads into the sand, right? Because they don't necessarily have an EV strategy, not in Europe, not in China, about how to necessarily adapt to this fast-changing pace of consumers in China wanting EVs over combustion engine cars. And so where we have seen them rely so much on earnings to help prop up profits, this is now not the case. It's not just for European automakers, it's also for the Americans as well. So it's a real inflection point moment here. And when you see even these Chinese EV makers still losing money, they're still in a better position. And this is why the Chinese automakers such as Volkswagen have invested in the likes of XPeng.
Danny, great to catch up. Thanks for the update. Really appreciate it. Bloomberg's Danny Lee. What are we going to talk about next? Democrats are heading for Chicago. It's the national convention. We're going to be joined by an ex-Obama official, Brett Bruen, to discuss the race for the White House, plus also who are the key officials within the Harris camp that Europe needs to be paying attention to. That conversation next. This is Bloomberg.
We are about 30 minutes into the European trading session. You're kind of seeing a little bit of mixed markets picture when you look at the broader indexes. The stock 600 is basically flat right now. You are seeing underperformance, of course, in the German stocks. A lot of that has to do with the defense sector. Of course, we're keeping an eye on what that actually means. Is it light volume? Is it low liquidity? There's a lot going on, especially as we build up to Jackson Hole later this week. That's, of course, is one aspect of some of the stories we're following. We're also, Guy, following a lot of the politics going on, not just in Germany, but in the U.S.
I don't know what the catalyst is going to be this week, but it's going to be fascinating to see what it ultimately proves to be. You've got a week that is starting with European equities basically sitting on their hands. Maybe a reaction, as you say, in the defense stock story. You've got a yen, though, that is aggressively on the move. The Japanese yen is up by 1.25% against the dollar this morning. You've got, therefore, a big focus, maybe potentially, on this idea that Ueda is hawkish come Friday. You've got Powell speaking at Jackson Hole as well Friday. That's going to be fascinating. But the politics is also in the mix as well. You've got the DNC, you've got Chicago coming up. That's going to be a huge event as well. Europe is really going to be paying attention to what we hear from the Harris camp.
And we've already gotten some kind of hints of that over the weekend in terms of what that Kamala Harris economic policy actually looks like. How much of it is a carryover from Joe Biden? Just take a listen to what she had to say, plus the criticism she's received.
We all know that prices went up during the pandemic when the supply chains shut down and failed. But our supply chains have now improved, and prices are still too high.
She's going to the Soviet Union playbook to lower prices called price control. She wants to eliminate private health care. She's for reparations. She's against fracking. She's for the Green New Deal. On and on and on. So I would make it about policy. A nightmare for Harris is to defend her policy choices.
And defending her policy choices is exactly what she now has to do. Of course, we heard there from Kamala Harris, Democratic candidate and the current vice president, speaking in the swing state of Pennsylvania, and Republican Senator Lindsey Graham. Let's get a little bit more context here on what we're looking at. Joining us now around the table, Brett Bruen, White House Global Engagement Director under President Obama, now president of communications consultancy Global Situation Room. Thank you so much, Brett, for joining us this morning. This is fascinating. And from an economic perspective, there have been mixed reactions to this kind of fighting against price gouging policy that she's laying out, to some mixed results. Is this what's going to get her this presidency?
Look, what Harris is doing is very strategic. She wanted to put out not a complex theory, but some very concrete pieces that voters, especially voters in those battleground states, can relate to. They can relate to a child tax credit. They can relate to the price gouging issue. Now, the details matter here, obviously, for the viewers of Bloomberg. But ultimately, what Harris has done is put a stake in the ground and say, I'm not going to cede populism to Donald Trump.
This feels like a little bit of a continuation of what President Biden was trying to do when it comes to things like drug pricing in particular. And this seems like a little bit of an expansion of that. In terms of other policy items, as we get them trickled out, how similar could her agenda be to that of President Biden?
I think she is going to hew close to Biden, but she's also going to create some distance because, one, voters and I think a lot of the policymakers want to see what Harris is going to do distinctly, and hopefully also learning from some of the lessons that Biden has, quite frankly, not delivered on. And those include on key economic issues. I think Harris indicated already she may take a different approach when it comes to Silicon Valley. She may take a different approach when it comes to cracking down on some of the efforts at mergers. All of that will be good news for Wall Street, because she is going to not be the same kind of Scranton Joe Biden presidency that we've seen for the last 4 years. Instead, it will be a new and improved version, 2.0, of Biden-Harris. And I think, quite frankly, a lot of business leaders are encouraged by what they are seeing, apart from, obviously, some of the individual announcements that rolled out last week.
Is she better at selling Bidenomics?
Without question. And here's the key thing. As a Democrat for the last 16 years, I've been frustrated that our messaging just hasn't broken through. And it's what Trump was able to do so effectively. And when she came out, went to Wilmington, talked to the now Harris presidential campaign and said, I'm a prosecutor, he's a felon, that was the clearest, the most compelling communications that I have seen out of this White House in a long time. And then she added Tim Walz, somebody who invented the term weird, which is a term that's
about the messaging. But I want to talk about the economic policy. The economic policy that Biden has delivered, in some ways, has not translated into how the public perceive him and his administration. True. Is she better at delivering on the messaging around the economics? All the other stuff, let's park that for a moment. But just in terms of that economic message getting through.
I think you're seeing it on the campaign trail. I mean, the fact just yesterday she's out at a gas station buying Doritos, buying drinks. That's the kind of thing that we have not seen enough of from President Biden. And I think, you know, it obviously had a lot to do with his age, a lot to do with an uncomfortableness that he had in getting close. He was a detached president. What I think you're going to see from Kamala Harris is somebody who is going to get closer to the people, and that, quite frankly, will help a lot in selling it.
I want to bring back to a point that you made when we kicked off the segment, which is that some of her policies may be a little bit more Wall Street friendly. Critics of that argument would say that, in fact, President Trump was great for the economy and President Trump was great for markets. And a lot of his moves to kind of decentralize some of the powers that be, or even decentralize some of that regulation, is a no-brainer for Wall Street and the broader U.S. economy. How does Kamala fight that?
Well, I think you got to take the full picture, and that is there's a whole lot of instability that comes with a President Trump, especially President Trump version 2.0. because we've seen that inconsistency. We've seen that inability for business leaders to take it to the bank, because he can change from one tweet to the next, from one moment to the next, and he's gotten even more erratic. So hopefully what we're going to see from a President Harris is an effort to improve upon some of the economic populism and policies that Biden has had, while at the same time, I think, trying to ensure that there is a stability, there's a strategy to it, because those elements are missing. For all of the positive things that Wall Street sees in President Trump, there are also a whole lot of negatives, not least of which his policy towards the global community, which he was at a moment's notice ready to sanction somebody because they didn't flatter him enough.
Consistency is, for the record, fair, a fair point, and certainly a benefit for President Biden and for Kamala Harris. That's been widely recorded. But someone also would argue that from an economic perspective, the way Joe Biden has carried on some of President Trump's policies when it comes to China, when it comes to the Inflation Reduction Act as well, has actually created more ill will to the United States. Do you think Kamala Harris will continue some of that?
Look, I think there is certainly a very cogent foreign policy argument to say that Biden has not, in fact, delivered on his America's back on the world stage message. We've seen from Afghanistan to the immigration issues that Biden has had a pretty spotty record, and one that I've been openly critical of. On the other hand, I think what we have seen is an effort to return to normal order, so that international institutions, so that some of our treaty obligations are respected, because one of the problems was that Trump could not be trusted. And I think Biden has at least restored a modicum of trust, and that Harris would continue that.
Who should we be listening to here in Europe within the camp? Is it going to be continuation of some of the key officials out of the Biden administration? Who behind the scenes should Europe be talking to?
Well, Phil Gordon, namely Kamala Harris's current national security advisor, I think somebody who has become a trusted advisor. And her circle is not that big, and she is only now starting to expand her own group of advisors. But I would also say, and this is an important feature of American administrations, you're going to have a turnover. Tony Blinken, Avril Haines, Lloyd Austin, they are not staying on for a second term. So start looking at...
If they were asked, would they be? Do you think whose choice is that? Is that their choice or President Harris, where she become President Harris?
I think if Biden was staying, you might see someone. I served with Tony in the Obama NSC. He was Biden's national security advisor during the Obama administration. I think we would have seen some of them stay on. Harris is going to want a different set of faces. She's going to want different expertise.
Why? Why does she want different expertise when it comes to foreign relations?
Well, part of it is the optics. You want to change. We're not going to carry on with the same policy on Israel. We're not going to carry on with the same policy that has been so unpopular. So, nonetheless, there is a group of Democratic national security officials. And I think the likes of folks that are going to be coming over from the Capitol Hill, members of Congress. We saw this in a number of cases in the Biden administration, folks like Cedric Richmond, who came in from Congress. And let's also bear in mind, she comes from California. A number of those key California leaders, up to and including Gavin Newsom, could find themselves all of a sudden national figures in a Harris administration.
When we talk about kind of the points that she has to make in the DNC today, or this week, I should say, during this convention, it feels like there's going to be a lot of pressure, yes, on her foreign policy record, perhaps, and her domestic policy, but also when it comes to the immigration story. I think President Trump is going to go lobby at the border, I want to say either today or tomorrow. How does she fight that? That's, of course, a hot-button topic for both sides of the aisle.
The way she fights it, quite frankly, is not to play defense, but to play offense. And you've seen that start to play out, where she's leaning on her role as having been Attorney General of California, having prosecuted a number of those criminals who crossed over from Mexico. You're going to hear more of that. And that is what is a marked change from the communications we've gotten from the Biden White House over the last 4 years, because they have been playing defense. They've been on Trump's terms. And now all of a sudden, Harris can take the initiative and say, those aren't necessarily my policies. Let me tell you about what I have done as a prosecutor, as Attorney General. And so she's able to embrace in a way that a lot of Democrats have struggled to, that tough on crime mantra.
But the majority of immigrants crossing the border aren't criminals. They're migrants. They're looking for work. They're escaping war zones, basically. In a lot of Central America, it's still unclear what she's doing to actually create homes for them. I can appreciate the criminal aspect, and 100% her record shows that she's quite strong on that, but that's not addressing the majority of the issue.
And this has been a point of tension for Democrats. You have Mayor Eric Adams in New York who's saying, I just can't take any more of the migrants that are getting bussed up from the border. And we don't yet, as a party or as a policy, have a good solution to that. I think part of it is what Vice President Harris has been working on, trying to deal with some of the root causes of migration, not least of which is the situation in Venezuela.
What's going to win the election for her? Where is this election going to be won?
I think this comes down, quite frankly, to Wisconsin, Michigan, Pennsylvania.
Where within those states? Key voter demographics?
It is the suburbs of Milwaukee. It's suburbs around Detroit, Pittsburgh, and Philadelphia.
And what is her message? What should her message be to those areas? It's interesting. I was reading some stuff about Pennsylvania and the Latino community, and the fact that she is at least communicating with them in the way that maybe Trump isn't at the moment. What is the message that she needs to take to these communities, and how different is it?
If you look at those communities, I think the key thing that they want to know is that she is going to deliver on the economy, not just when it comes...
But it's still the economy, yeah.
It's still the economy. Secondly, reproductive rights. There is a lot of concern in those suburban communities, including in Republican households, of some of the things that we have seen from the Republicans trying to push not just bans on abortion, bans on things like in vitro fertilization. That resonates with suburban households who say, what's going to happen if, my daughter, if my cousin, if my friend finds themselves in that sort of situation? And then lastly, I think that she has to have a strong crime policy, because that has been an issue that Trump has been able to whack the Democrats over the head for over the last several of years.
How does she appeal to the voters in Dearborn, specifically when that's been the blind spot, or at least the Achilles heel, it feels like, for President Biden? For international audiences, this is the city that has the largest Muslim population in the United States, has been largely boycotting, I would say, President Biden, which has been kind of a win in the previous election cycles because of the aid to Israel and the war in Gaza. How does Kamala Harris repair some of the damage there?
The way she has been doing it is outreaching, saying, I'm willing to meet, I'm willing to talk, I'm willing to work towards, in my current capacity as vice president and once I become president, that enduring ceasefire. The other way she does it is say, look at the alternative. We have a candidate who has embraced Benjamin Netanyahu in a way that is unprecedented, a way that, quite frankly, is imbalanced in how the United States should be showing up in the Middle East. And so while, yes, there is enormous frustration in the Arab American community with the Biden policy, Harris has the luxury, and I think this is an important point as we also watch what's taking place today and this week in the Middle East. Biden now has a freer hand. He can go to Netanyahu and say, I don't have to justify what I'm doing out on the campaign trail. And at the same time, Harris can detach herself from some of the things that Biden is doing, which allows more leverage in those ceasefire talks, which is why I'm confident that in the next several days, I think we get there.
A final question to you on, I think, the top story out of Europe this morning, which is that Germany is pulling back some of the aid to Ukraine. Already members of the Trump campaign are saying, if they're not paying, why should we? At what point does the Democratic Party start to think in the same way, especially when economy, inflation, and money basically towards war zones has become such a hot topic issue? At what point does the Democratic Party also look at Germany saying, Europe's largest economy isn't helping out with the war effort, why should we?
Well, let me start with Olaf Scholz needs to go back and revisit this decision, because you cannot be the largest economy in Europe and decide that you're going to save a few euros by trying to cut back on Ukraine. particularly at a critical time. And this is a moment for Harris to show strong global leadership and call out Germany and say, if you want to be considered such a vital partner in not just issues on the European continent, but elsewhere, you have to show up. And we have been carrying your water here in the United States, saying that European allies are doing enough. And for you to pull back at this critical time undercuts me. It undercuts your efforts to try and assert more European influence.
A fascinating conversation. Brett Bruen, president of Global Situation Room, and of course, a former employee, I should say, or a member of the Obama administration. We thank you so much for joining the program. More coming up next. Stick with us. This is Bloomberg.
Welcome back. Monday session. We're drifting sideways. Not really a lot to talk about, certainly at an index level. Below the surface, though, there are things we should focus on. Certainly German defence stocks, European defence stocks are one area where we are seeing some movement this morning. This after reporting over the weekend suggesting that we're going to be seeing German aid for Ukraine, for defence spending in Ukraine, being put on hold. You can see the effect of this on the stock story this morning across Europe. Names like Rheinmetall are under pressure, down by 4.5%. Context here, though, is important. As ever, these stocks have had a good run. Any wrinkle is going to therefore cause a maybe disproportionate effect on the stock price that we are seeing. Ollie Crook joins us now from Berlin. Ollie, how set in stone is this policy? How determined are the Germans to make sure, the German government at least, that we see maybe a halt being put on extra spending?
Yeah, Guy, I mean, listen, there's no question about whether or not there needs to be a hold on extra spending. There may be still some room to debate where it's going to come from. But again, this was at its root that constitutional crisis we had at the end of last year that basically reaffirmed the debt brake and all of its nuance and difficulty, meaning that the German government just doesn't have the flexibility that it thought it had. So it needs to make some tough decisions. We understand that sort of over the weekend in the last couple of weeks that the defense ministry was asking for an additional 4 billion euros to help fund Ukraine going into the future. And the finance ministry said basically no way. We're not going to give any additional money, new money, over to Ukraine, which, as your guest in the last couple of minutes was just pointing out, is a huge signal from Germany, not only because it's the sort of biggest economy in Europe and the leader within Europe on a lot of different topics, but it's the biggest supporter of Ukraine within Europe and the second biggest across the world. So if they're saying that they're not actually willing to put more money forward, that is a signal that is going to be heard by both allies and, of course, by Moscow. However, if we want to talk a little bit about the reaction on the stock front, we should also mention that this does not diminish Germany's ambitions in terms of its own military spending, because remember, apart from the budget, they've set aside 100 billion euros in a special fund that is off budget. That money will still be spent on its own military development, which says a lot of that's going to go to these defense companies anyway. But right now, probably that sort of full sentiment across the board is being sold off this morning in the session in terms of the defense stocks.
Well, the underperformance you mentioned definitely kind of centered or concentrated in Germany, but we're seeing some of the other defense stocks around Europe also sell off in Norway and Sweden, even right here in the UK as well. Ollie, what kind of precedent does this set for other countries in Europe?
But I think this also, speaks to the heart of the matter. And we've talked a lot about on this show with a number of the executives of these defense companies, right, which is, where are the orders? We have a lot of talking about it. We have a lot of money, being sloshed around in these sort of funds to a certain degree. But these CEOs really need the order flow in order to build up their production capacity, all of these sorts of things. So again, if that money is not going to be going towards Ukraine and that sort of volume is not going to go towards Ukraine, it does bring into question what they're actually going to do, what they're actually going to build out. So again, this has been at the heart of the conversation. We've talked to, the Saab CEO, a number of other executives about kind of where that money is going to go and if the orders are actually going to be there. I think at the end of the day, the reality of the situation is no matter what happens in the United States at the election, there is a consciousness within Europe that they need to hit at least that 2% spend. The question is, do they need to get closer to 2 or 4, so 3 or 4%? That is perhaps maybe in play, and if maybe the heat dies down on the pressures there, and some of the other economic woes start to take sort of more prominence in the front of the consciousness of politicians, then maybe that diminishes.
Ollie, great stuff. Thank you very much indeed for updating us and getting the details on this story straight. Ollie Crook joining us out of Berlin. Let's talk about the week that we've got coming up. In some ways, a quiet start. The DNC in Chicago begins. We've got Jackson Hole obviously starting early in the week as well, but they kind of crescendo late in the week. You've got Chinese EV sales to keep you busy between now and then. You've got rate decisions out of Sweden and Turkey. Turkey likely to deliver a fairly hawkish hold, we understand. You've got retail sales. You've got Target. You've got Macy's. Retail earnings. You've got Target, Macy's and TJX out with numbers. You get a whole load of speakers as well. Panetta's going to be speaking, but it really kind of starts to get going Thursday, Friday. European PMIs, US PMIs, Thursday, Friday. Powell's going to be speaking, obviously, at Jackson Hole Friday. But you've also got the Bank of Japan's Ueda giving testimony in front of Parliament. This testimony coming after the recent rate hike that caused the turbulence around the world that we saw a couple of weeks back. Which of those two events is likely to move the market more? Let's try and get an answer to that question. Bloomberg's MLive strategist, Ben Rahm, joining us out of Dubai. Ben, given the price action that I'm seeing this morning in dollar-yen, what are we watching here? Which one should we be watching more? Is it Ueda or is it Powell?
I would watch Ueda more, Guy, because, if you look at the pricing in the Fed futures contracts, the markets are pricing 100 basis points, still 100 basis points of rate cuts from the Fed by the end of the year. I think they're barking up the wrong tree. Why do I say that? Because, the Fed is keen to take its rate to less restrictive levels. So they want to cut rates, but they are not going to throw caution to the winds and start cutting rates in jumbo moves, which is what the markets are pricing. So I think this is about accommodating a Goldilocks economy. The economy isn't calling out for rate cuts with great urgency just yet. So 100 basis points of rate cuts, I don't see it happening. If you shift yourself to Japan, what happens is the markets are pricing hardly any hikes from the BoJ. They're pricing 9 basis points of rate hikes from the BoJ by the end of this year and hardly even 25 basis points by the middle of next year. I think that is huge mispricing there. And I think that the BoJ is not going to rattle the markets, but they are going to raise rates. And probably another one is coming by the end of December. So as that pricing shifts, you will see nominal and real rate differentials move in favor of the yen. And that will alarm the markets if the yen starts moving higher, as it is moving today.
Yep, we're certainly seeing a big move this morning. We've also got CPI inflation data coming up at the back end of the week for the BoJ to digest as well. Ben, thank you very much indeed. Ben Rahm, Bloomberg MLive strategist. That's it. So that's the week. It's Powell versus Ueda. Ben thinks it's Ueda.
There's plenty going on. There's positioning. There's economic data. I don't know. It feels like it's like volume.
We got lots to talk about.
Lots going on. That does it for the opening trade. The Pulse is up next. This is Bloomberg.